were an impact-centered organization. The impact that we were trying to drive drove our decision-making, and it actually helped accelerate the scale of the business.
Imagine knowing exactly what to say to an Edtech founder to engage them and catalyze a proprietary transaction outside of an investment banking process. Today's guest, Carl Rectanis, built, scaled, and exited LearnPlatform. He's sharing his insider perspective on how founders think about private equity and the daily outreaches they receive, as well as how you should think about sourcing private equity deals, how to build trust with founders, and how to become the partner of choice for impact-driven companies like LearnPlatform. In today's episode, you'll learn Carl's unique screening method and fail test for evaluating potential partners.
Setting up not what success on a test looks like, but what absolute failure looks like.
How to cut through the noise and build authentic, long-term human-to-human relationships with target CEOs.
There's only one way to build trust. It's to set expectations and then go beat or exceed those expectations.
Why impact-centered companies may be the future of fund-returning portfolio companies and what that really means for private equity.
It's not only correct and morally and ethically right to do this, it's like good for business.
And the key questions you should ask every founder to engage them, qualify them, and catalyze transactions with them.
What does success look like for you as a business and as a leader?
This is Deal Sorcery. I've been so excited to have this conversation. Carl, glad to have you here, my man. And thanks for coming on the Deal Sorcery podcast.
Of course. Glad to be here. Looking forward to chatting.
So a big part of what we want to cover today with you is just like spending some time on that path from, kind of founding to exiting of LearnPlatform, like we're talking about here. But with an emphasis on, the sets of actions and decisions in the months, weeks, and hours leading up to that final exit, I guess to an extent, a dive into the brilliant mind that is Carl Rectanis here. But before we get into any of the nitty-gritty details there, can you take us just back, and I know you answered a little bit of this, but just back to the very beginning of this story, like how did you get into this? Like what was that initial, spark that launched LearnPlatform?
LearnPlatform was my fourth successful education innovation organization, not my first rodeo. And honestly, I spent almost a year in due diligence trying not to start LearnPlatform. I had a great, I was consulting with large foundations, guiding school districts and states, policymakers on important education policy work. It was a good business, but I had an itch that needed to be scratched, and there was a need to figure out, what was going to happen. How do we get more informed decision making into EdTech? So I spent about a year doing due diligence, trying to find a way or another organization to run with this business. And after about a year of feeling like others already had their own businesses. They might have bias, or the approach might be a little bit different than what I was hoping for. I had enough people kicking me in the backside saying, you need to start this. You need to run. You can do it. And so we launched in 2014. One of the things, as an entrepreneur, I really believe in testing, customer testing. And at the time, the lean model was all the rage. I believe in fail tests. And by fail tests, I mean setting up not what success on a test looks like, but what absolute failure looks like. It helps me because, if you play golf or, you'll leave a day of golf only thinking about the pure drive that went right down the middle or that beautiful putt. But you may have shot a 104. But you only remember the 2 or 3 shots or that felt really good. Now, if you set your fail test, I want to hit 2 or 3 good shots today, great. But if you are trying to win a tournament, you're trying to shoot in the 80s, really 2 or 3 good shots is failure. And that's okay, but it's not, something like entrepreneurship is important. So the reality is, I got to a point where I said, okay, here's the fail test. We're going to go to one of the largest investment conferences there is. And if we don't get $250,000 invested in a seed to start this thing, it's not going to happen. Like we're gonna continue to try and find another way. That conference, which is ASU GSV, which is much smaller then. It's larger now, but identified almost 350K in early investment, including Kaplan, Techstars, and others. And I got home and told my wife, I'm sorry, I think we're going to have to start this company if we're okay with it. We failed at failing the test. And so that's how we kicked off. We were part of the Kaplan Techstars Accelerator early, primarily because we knew that what we were trying to do was a larger play. It was a larger platform data play. And so we didn't want to be a North Carolina company that makes good over time, that sort of lands and expands. We had to be a U.S. company that happened to be based in North Carolina. And that drove the type of impact that we wanted to, go from there.
That's great. No, thanks, Carl. That's really helpful background. I want to ask you a bit about your exposure to private equity. You just mentioned that you raised some seed money, and I think I understood that you maybe raised a Series A round, some VC money. But as we're going to talk more about as Learn Management got closer to exit and the types of interactions that you had, when did you start hearing from suitors, potential buyers, private equity firms?
Yeah, good question. So just to provide some context, we did raise a seed round over a couple tranches. And then I'm very appreciative of New Markets Venture Partners out of Baltimore and Emerson Collective, both out of Palo Alto. Emerson Collective is led by Lorene Powell Jobs. The effort, both smart investors that co-led our Series A in 2018. I would say that we were interesting because we launched something called the Edtech Top 40 around 2017, 2018. A lot of the data that we were, aggregating and analyzing, we actually turned into something called the Edtech Top 40. It was an infographic and some information about what we were seeing across the market. In part, that was a content-driven marketing strategy to help communicate what was happening, to make the case, but also to help, educate the entire market on what education was looking like and what EdTech looked like. And as it happened, it was some of the most useful detailed data for others who care about this market. And so, wait a second, where is this data coming from? What is this data based on? How can we get more of this data? The EdTech Top 40, for your reference, is a list based on actual student engagement across millions of students and teachers with those 11,000 different products. We published the 40 most engaged tools every year. And so we started that in 2017 and continued to publish that annually or sometimes semi-annually when we had big events like COVID to help the market understand what was going on. And so very shortly after we published that, private equity, who, you guys are smart folks, want as much information about what's going on in the market as possible. And it was quite opaque. But we started taking calls from other people, not on our finances or back end or unique IP per se, but more like, hey, can you tell us more about this information? How could we get more of this data? And what does that look like? How are you getting this? That is actually what activated our first, sets of conversation with private equity. And it was not dissimilar than what we saw from other investors, like those who led our Series A. They recognized that we could be a sector benefit, but could also actually benefit their entire portfolios if they really cared about impact.
I remember those top 40s. I just probably like a lot of folks was looking. I'm like, wow, you got a cool list here. All right, these are all the people I need to call.
You're not the only one. I'll tell you a quick story if you want. I think it was 2019. We published our EdTech Top 40 and we would always highlight which ones were new entrants. And sometimes people pop up, or as an example, the second COVID hit, Zoom became very high, was not ever on the list before. But in 2019, the week after we published, we started getting calls to say, who is Blookit? Where did Blookit come from? Who is this? What we can't find anything on this company. We don't understand what's going on. So not only did I get calls, but there were a bunch of investors, both VCs and private equity, posting on social media. Does anybody know who founded Blookit? Where do I find the team? That type of thing. They've since, I believe, transacted a couple times, but rapid growth, rapid engagement, and certainly, a signal to us that, hey, this data has some value for the market, and we're glad to provide that level of insight.
I love it. So like when we first met back like 2018, 2019 timeframe, we were spending time together. Like, I'm curious, like how many private equity firms or potential suitors were you talking to at any given time?
As you go through the stages of growth, we had raised a Series A. You try to focus on execution. We were just trying to grow the business. I would say that at that time we would get probably inbound once a week to 2 weeks, so twice a month. The analyst or somebody would reach out. We certainly saw some folks at some of the sector focused conferences or what have you. And then over time, as the business grew, as our data became more consistent, as we shared our information, fast forward to 2022, prior to us running a process 3 to 4 a day.
3 to 4 outreaches a day that you were receiving.
Yes. Yeah, I think that it got to the point actually that in 2019, I believe we were in the midst of it. I actually created a quick survey, and each time I would get an outreach, which again was just once or twice a week at that point, I just send a quick response back that said, "Hey, thanks for the outreach. If you could take just 3 or 4 minutes to complete this questionnaire, I'll follow up with a time that we could meet if it makes sense, if and when it makes sense." And I would send that, and we would get, and that way I asked all sorts of questions. Who are you? What's the firm? Standard stuff. Are you an associate or a partner? What kind of checks do you write? Have you ever invested in Edtech? Do you have any non-white, non-male, partners? Any question I wanted. And to be perfectly honest, it saved me like thousands of hours, I think, in interaction. I think it saved them too. I think it was helpful for both sides. But the other thing is when we were ready to have a conversation, or we sent out our, quarterly or annual updates, it went to the right people. And so we could keep folks notified on what we were doing, and be honest about finding the right match for the work that we were doing.
Yeah. When you had folks fill in that survey, and give you the piece of information, like what was your decision framework about whether or not like you should talk to them or not?
Yeah, stage of the business, it changes over the stages of the business. One thing I'll say, which was we had like 95% completion rates. People clearly, it signaled to me, if they completed it, that was useful. That was a signal that they actually took, 5 minutes to complete it. The second thing was, for us, we were an impact-centered organization, or what I've come to call being an impact-centered organization. That is, the impact that we were trying to drive drove our decision-making, and it actually helped accelerate the scale of the business. A lot of times, impact is considered code for lower returns, or code for, we're nice to have. The reality is we understood what we wanted to do in the market, and that drove our business model. It drove our financing strategy. It helped speed up our product strategy. Our operating model was really centered around our impact model. And so for our financing strategy, we wanted smart money that had experience that could take us to the next level, not just the check, but people who had experience in pattern recognition, maybe connectivity that could help the business grow in a meaningful way. That's what we got with New Markets and Emerson at our Series A. And as we thought about private equity, it was really about we had started to see market network effects, sort of a virtuous cycle in markets. So market building, that network effect, marketplace business experience was intriguing. Connectivity and experience in education. Education, people say education isn't rocket science. It's harder than rocket science. Rocket science only has three really laws of physics, right? And then you got some, you need some oxygen. But basically, three laws of physics, you understand rocket science. Education is more complex than that. And so folks who had experience, because we knew that's where we were really focused and had a massive TAM, was where we wanted to focus too.
Why did you end up talking to, me and Naveed and like the Sarant crew back in the day when you did? Like what, I don't know if you remember, but I'm curious, like why?
Generally, what would happen is, and I'll talk specifically about Sarant, but I'd get a sense of who these folks were from the basic details. Hey, maybe there's a chance either now or in our next round or level of growth that these folks I may want to build a relationship with. That would trigger the fact that, and for me, the other thing was I get a lot more joy with more diverse groups of people, folks who challenge me, folks who bring more experience. Certainly there's nothing wrong, with a bunch of white guys, but generally diversity on the partner level was a benefit for us. We were named one of the most innovative companies in the world, and I credit that with how diverse we were, 2 to 3 times more diverse than the sector, 60% female, 43% non-white, at the time of the acquisition. So generally from there, I'd set up a conversation and look for a couple things. One, what kind of questions was I getting from an organization, and what kind of experience beyond the check, could they provide or share to help us grow? And Sarant, checked a lot of boxes: experience in the education space, smart questions about what you were seeing in the market, and a willingness to collaborate and have a conversation to engage with a CEO and an impact-centered organization like ours, which could be considered antithetical or not cookie cutter to a pure scale at any cost. We believe impact drove scale, and it did for us. And that was a little bit different than a purely financial, private equity partner might think about the world.
It seems like it was really who you spoke to was dependent on who the firm was and what they did, and aligning maybe their mission and experience with your company. I'm curious just on the person who did the outreach. As we think about people who hire, or firms that hire people into these roles that are doing the initial outreach, the sourcing, were you paying attention to, this is an analyst and their background is something that I don't recognize, or this is a former investment banker with 10, 20 years of experience? Were you taking that next level of kind of assessment of who was reaching out?
Definitely. So the role matters. I don't have it. I like analysts. I like investors. I like investment bankers. I just like our team more. And so I want to make sure that, it's going to be worth everybody's time. And so I had no qualms with analysts or associates doing the outreach, but I would also want to understand quickly, what the partner and decision-making framework was at the organization, what the experience and expertise that the more senior folks could bring to the table on that. So when I got outreach that said, hey, I'm an associate, our partner X has done this in this business, in the similar business, that was compelling to me. The other thing that usually spoke to us was coming to visit. If people had invested in organizations locally, referrals, or hey, my partner's going to be in town, would love to get 30 minutes to have a conversation. It's opportunistic. We may or may not be raising right now, but we want to talk in the future. We'd love to learn about the business. Great. That was helpful. So it did matter on the role. It certainly wasn't it didn't eliminate the conversation if it was someone lower down the organization, but I would certainly be cognizant of the types of conversation I was going to have.
So you mentioned that's helpful. You mentioned folks who were appealing to you often had certain characteristics, demographics, knowledge, and experience in the space. Ask good questions. Were those the characteristics, or were there other characteristics of the other sorts of folks that you spent time with, outside of Cerent, for instance? Like what did you find appealing in those conversations? Like what are the other characteristics of those people that you said, oh yeah, I want to talk to them?
As an entrepreneur, I believe in understanding or knowing what you think success looks like down the road and mechanizing towards that outcome. That's what we try to do all the time. And so when a private equity firm, an analyst, associate, a partner, a GP, in those conversations, if they had a clear strategy that they were trying to activate, it also always felt more productive to me to have that conversation. If I had a clarity of, hey, we think this is the trend or this is where the market is going. We have some belief that, one way to grow a great business or to have impact looks like, both organic and inorganic growth with a tier one provider. That helped me understand where the strategy was for the organization and to envision that my success and their success could be combined. That's ultimately what you're looking for as an entrepreneur, if you have choices, right? The other reality is you need to run a business that is interesting, that isn't low on cash, that has the flexibility to make those decisions in order to do what's best for the company. And having that optionality was something we were blessed to be able to do.
And so it sounds like, kind of coming to the table with, not only a thesis for the space, but perhaps like concrete recommendations or thoughts about like how we might be able to add value. Am I reading that the right way?
Yes, absolutely. I was a teacher. I'm not a finance guy. Right. I didn't grow up on this. But I have learned over the years the lexicon and the way we talk in finance, right? Deal flows, valuations, check size, that type of English to English translation, I do all the time. When a private equity partner or others can do their own English to English translation and speak the education lexicon or the regulated market lexicon in a way that is authentic and real, that says a lot to an entrepreneur like me that, hey, not only we're not, just passing by, into education because right now it seems like the spreadsheets look better than the spreadsheets in healthcare
right.
or finance or, silicon or what have you. But actually, these are folks who can add value for me. So understanding and listening, the best way to do that is to actually be engaged in the market. So again, that's where associates and experts who, can go deep into a sector, not just into the spreadsheet Olympics that are, critical for the business, but, not always the most compelling aspect of what's driving a lot of business leaders.
Carl, it sounds like you had a framework for the inbounds that you received. I'm thinking about it mostly as inbound emails, but I suppose if someone happened to cold call, you probably would send them that same survey and try to get the same type of information. But as we just think about sourcing and strategies and how to break through, something Dan and I talk about a lot is there's a lot of noise out there. And if you're a good company, a target that firms are after, there's even more noise. So were there any other types of distinct outreach that you found engaging? Like there are some firms that prioritize sending gifts. Did you receive any fancy bottles of wine or anything that you can remember?
Absolutely. I mean, I feel like I've seen a lot of tactics. There's only one way to build trust. It's to set expectations and then go beat or exceed those expectations. And so what I liked about having initial conversations was I got a chance during those calls to set expectations. Here's what you can expect us to do this year. Here's what we're driving towards. Here's what we expect. But what would happen is, hey, can we call you in 6 months, or we'd like to follow up? If they didn't follow up or they didn't call us, that's okay. I would send out at the end of each year an update on what we did last year, just to communicate, hey, we met those expectations that we set for ourselves. And even if it wasn't top of mind, it equipped us to, when we had that next conversation, we'd already started to build the trust to say, when I talk to Carl or you look at this business, they've done what they said they were going to do over the previous years. So we did some tactics to sort of set expectations and then go meet them. I always appreciated when I got those calls 6 months later and folks had clearly documented internally, you said you were going to do X million this year on ARR. I know we're not quite at the end of the quarter, but how's the business going? That they understood, what that looked like for us. And I do the same thing. How can I be most helpful for you? And what should I expect from you guys? Are you looking at new businesses? Do you expect to do any transactions? What's happening in the market? And we could share those notes in a collegial way to be helpful for each other, as opposed to, sometimes these conversations can feel predatory. I will say, gifts, kind. One example is we received one that was it was a custom bobblehead that had it was supposed to have my face on it with a suit opening up and like a Superman, under, we think you're great, blah, blah, blah. And, I'm a very much a servant leader. So it didn't really quite hit the right tone for me as a leader. But my team used to hide that thing all over the office because I basically tried to throw it away. And my assistant took it out and kept hiding it in different places in the office. So some nice wine. It certainly makes you feel like you should take the call. But I think the reality is it's that trust building that's most important.
Super helpful. If you were sitting in the shoes of a business development professional in a private equity firm today, and your job is to, like you say, build those deep trust-filled human-to-human relationships with folks over a long period of time, what would you do? Like, what would your strategies and tactics be for getting in front of those business owners?
First is to ask a couple questions so that you can start to build trust with those folks. What does success look like for you as a business and as a leader? Okay, it doesn't sound like we're a match right now, but we might be down the road if we did X, Y, and Z. Be authentic about that. The second thing that I would encourage is connectivity to what those businesses are looking for and have needs for right now. Hey, I got a couple businesses that might be, a few stages ahead of you. Would you be interested in talking with the CEO of those businesses? There's a couple partners that I know they've worked with. It sounds like you might be. Can we be helpful in making a connection or, adding value right now? Techstars has a phrase that is give first. And I think that motto of sort of giving first and sort of building value as an authentic collaborator and partner is always something that I appreciated, even if that's just a chance to think differently together. It might not have immediate value, but I would encourage you to see all relationships as long-term. The second an early stage business development person starts to see all relationships as long-term, it becomes not about the first call or the no or the, making 50 calls or shooting out X number of emails and what kind of conversion rates. It becomes, hey, I'm building a relationship, and either now or in 20 years, this may have value for me from a financial or other perspective. But the reality is, all these relationships are long term. And once you understand that, you start to approach it a little bit differently. Your conversations change. You have deeper, connectivity, and you get faster yeses and faster nos. You avoid the long maybes, and that's what holds up businesses and investors all over the world.
Super salient, helpful advice. Like I love it.
So I want to ask you about timing. I think it's a constant theme that comes up for people who are in these business development roles. The private equity sales cycle is a long one, and it's because there are real people like you and like your employees that are doing real things, and so finding and meeting that company at the right time is probably not likely to happen. But you have to keep in touch and develop a relationship. But what was going on, in your head and your mind at the business that made you think now's the right time to, consider a sale or to launch a process or raise money, whatever was going on at that time?
I'm somewhat limited in all the specific details, but at a high level, let's talk a little bit about the business itself. LearnPlatform in 2022 had great sort of enviable SaaS metrics on growth rate, retention. It had unique intellectual property within the district and state level. And we had launched a new business that was showing a lot of promise. As my investment strategy, we had only raised $6 million in total venture and seed funding previously. And so relatively light for the amount of business we were doing compared to others. The business was growing well, and we now understood what we could do with another $10 million on the balance sheet. We had markets like international and higher education that we were ready to go after and that seemed ready for us. We saw a high promise in our new evidence as a service business, which was really catching fire on the private sector and had a sales cycle that was somewhere close to 3% of our public sector sales cycle. It happened very quickly. And so we felt really good about that. And the reality is we had a good business, but we felt like if we put some money on the balance sheet, we could accelerate our growth in a meaningful way. At the same time, we had seen inbound, and we had received unsolicited offers from both financial and strategics that had said, we think it's the right time, based on what we understand about the business. And, we had built trust over, the previous years such that people felt comfortable doing that. And so as we thought about what was best for the organization, and we had kept our goal of becoming required infrastructure for education at the forefront, the question was, how quickly can we get to that, BHAG, to that North Star? And we felt like funding, putting some money on the balance sheet to invest in that business was the right time. And so we activated a process primarily because we knew that there were multiple people interested. And we wanted to work through the process of who would be the right partner for us to take the next step. And we were blessed enough to have some optionality around that.
Once you guys decided to run that process, obviously you had a bunch of different parties at the table. I'm curious, like how many of those how many parties overall did you guys, had at the table through the process? I don't know if you can share.
It wasn't just the transaction that we needed to make a decision about. We had unsolicited offers, which we had to decide what that looked like and how we would engage. Once we realized we had multiple people who would probably be interested and good partners for us, the question was, how do we choose the best one? And so we decided to run a process. And we had also been getting inbound from investment banks, business partners to help us identify, who that might be. And so we actually ran a process, a bake-off, with about a half a dozen different banks and advisors for the process. We did that first. We were really appreciative of all the folks that were a part of that process. And we found that Needham and Company out of Boston, Jack and the team, which included Martin Keck and Kiernan, who are now at Harris Williams, really understood the market. They understood our needs, and they understood what we were trying to do in identifying a partner. And so, with their help, later that summer, we decided to run the process, and they were a good partner for us. Ultimately, we had close to about 100 parties engaged across financial and strategic, and both majority, minority, and strategic folks who engaged on the process.
Out of those, say, 100 folks, how many of them had you had prior dialogue with, like before the process kicked off?
Probably 50 to 60%, because of who we had. My engagement with this market was twofold. As a data source and collaborator to understand what was going on, not just as a function of our business. We also targeted in this particular sector for the types of partners that we would look for. So I would say about half of those I'd had some level of engagement or outreach from. I know that because I now had a spreadsheet of about 150, 175 different organizations that had been reaching out to us over the last few years. And so that was part of the source list, but certainly not the only part that got activated around the process.
So 175 odd firms had reached out to you in some form or fashion. You had that spreadsheet of folks that had reached out to you, and then 50 some of those ended up being part of the process.
Yeah, I'd say 50 to 60 plus others that we hadn't engaged with before.
Okay. And then how many folks ended up being pulled forward to management meetings, for instance, out of those 100?
Again, I'm a little bit limited in what I can talk about, but consider that, I think it's fair to say that in a lot of processes, you may see, call it between 10 and 20% get engaged at the sort of management meeting to LOI. And then, some finalists go through a process there.
The only reason I'm asking is more just I'm curious about that set of folks that had engaged with you previously. So if I look at that subset of 20 that got pulled forward, for instance, I'm just going to use 20 as the number. I don't know if that's the right one, but out of those 20, how many of those were part of your 175, spreadsheet? Do you have any sense for that?
I think the ratio was somewhat similar. There were a few folks, I'd say 30 to 40% we may not have engaged with at all, or, in any sort of meaningful way in the past. But the people who had engaged in the past were also pretty motivated and understood the business. So, there was a bit of both all the way to the end.
Do you think there was any leg up for the folks that had engaged prior to the start of the process?
Absolutely. There's no doubt about it. I mean, the long-term relationships matter. And when all relationships are long-term, there's comfort, there's confidence, there's trust that's already been built up. There's understanding that is just sort of nascent. And as you know, with these processes, they can become pretty rigid. We only engage with them through the bank. We're also trying to run a business. This is a huge distraction to our growth, right? So, there's things that don't get said or are between the lines, and it works on both ways. I think the organizations that had engaged with us clearly were, still motivated by what they saw as they got into data rooms and things like that, as were people who are new to the process. But vice versa, I had a little bit of a sense of how they thought about the world, how they could be a partner. Those management meetings might have had, slightly more depth or more detail to inform decisions moving forward. And certainly as those circles expand, leadership teams start to get involved. partners get involved. Having that type of connectivity and understanding of each other is really important. Ultimately, it's not unlike, getting married, in that you may really like, the partner you engage with, but you're getting the whole family. And so, taking the time, not only do they do translation, on your behalf, but, you want to know what you're getting on both sides. And so it's the same with the leadership team of these companies. My heads of sales and product and engineering had a trust that I would bring partners that were similarly motivated, that wouldn't undercut, what our growth strategy was, that understood the business and could be advocates and supporters to expand their, leadership potential and their opportunities. And so that actually spoke as much or more to me than as my history or the type of strategy sometimes, because at some point you get to a size and it's not about the person, it's about the team, and the team really matters. So I think that's it certainly had a leg up. Doesn't mean you shouldn't engage later, but engaging earlier likely gives everybody a lot more confidence, willingness, and a higher likelihood to get to yes together.
Yeah. And you bring up a really interesting point there, right? And I'd maybe to zoom out on that for a second, which is like, what was your decision framework, or like the components of your decision framework for who's the eventual buyer here? Like once you got down the line a bit, obviously, like I know price is a component of it for everybody. Like it sounds like there's clearly a team component here in terms of, do they mesh with my team, et cetera. But like, are there other characteristics for you that fit into like how you define that final decision, like go, no go framework for whoever ends up being the eventual suitor?
As a company leader, you're responsible for setting, the vision, the trajectory, that North Star with your leadership team of where the organization is going. But you also understand when you go through some of these transactions, especially, that are majority transactions, it's not really up to you after that. And so, the comfort of understanding, hey, are these partners aligned or different with that North Star? What does the post-transaction world look like for me, my team? Not just the impact on the market, but how we're going to execute and drive things forward. And ideally, is there a 1+1=3 or more situation here? Right? Now, to be honest, the reality is a lot of organizations may want to be taking chips off the table. It may just be about the dollars. But as a company leader, especially as a founder and CEO, it's not just about the spreadsheet. And I've seen and been a part of and supported organizations. I was actually told by my board, if we only take the highest price, but it means that LearnPlatform no longer exists or doesn't do what it's been doing for the last few years in the future, my board would have considered that, a loss, a failure. It wasn't just the price, but it's certainly a part of it. And to be clear, it was an exceptional outcome. The question as a company leader is, hey, is this moving us towards our North Star? If it's moving that North Star, is it a North Star that's either further afield or even better than what we even believed? And the way I usually translate that is, what does 1+1 =? Is it 1.2? Is it 2? Is it 3, 6, 12? Like, what could that equal over the next little bit?
That's great. Carl, I'm not sure if you'll be able to answer this, but Dan and I may be biased towards private equity. I have to assume in a process there's a second place finisher. Is there anything that you can share about why that didn't get done? I'm wondering if there's something that can be pulled out here that might be helpful for people, and maybe just how that broke down.
I'm super proud that we had optionality and some choices to make. We chose the pathway that we took because the strategy we believed of the two organizations together could have an outsized impact more quickly than the other options. Now, to be clear, we were running a dual process. There was a pathway for a minority investment. There's a pathway for majority and private equity and purely sort of, I'd say, pure financial, but they had smarts in the space. And then strategic, which was ultimately what we chose. Each of those was a consideration all along the process. But even in the final stages of our decision making, we had optionality there. And it was less about, ultimately, you only get to choose one. And so it was less about the ones that didn't make it and more about there was just an outsized, value, benefit, outcome for all the people in the near term and what we felt like in the long term, it could deliver. So I think that, look, the spreadsheets work, the numbers worked, and we felt that we could get the best outcome, for our culture, for our people, and for the market on the pathway that we took. The nice thing is in my work now, and since then, I continue to engage, partner, and sometimes directly work with, second, third, and fourth place. And I'm honored to do that. And I count it as a win in terms of making sure that our relationships are long term and everybody understands, what made the most sense for the organization.
Love it. So now, congrats again on the exit. Sounds like a great outcome. Sounds like it's something that's good not only for you individually, for your team as a whole, for hopefully the market as a whole as well. So now that you've exited, how are you spending your time?
I led K-12 strategy and platform strategy at Instructure for just under a year, but am excited about the growth and pathway that they'll take. But I've transitioned to board roles and doing advisory work for organizations that are really focused on impact. I found that the tools and the practices, the approaches we've took at LearnPlatform seem to be resonating with organizations that want to have an impact on the world and want to grow quickly. And so I call that that sort of combination of tools and practices and approaches being an impact-centered organization, having an impact model at the middle and at the beginning, understanding where you're trying to go, and then mechanizing that pathway, being smart about business model questions and financing strategy and product strategy and operating model in a way that actually accelerates the business, not that it's an after the fact measurement of impact or even considered just aligned or a drag on the business, but one way that's really pushing the business forward. It seemed to work for us. Our turnover rates were very low. Our team loved where we were going, and we got the best talent in the world for the work that we were doing, which, as you know, is critical for growing a business. We had an aligned business, so as we moved through the stages, moving from founder-led to a scalable, repeatable sales process, I never woke up in the middle of the night worried that one of my sales guys was going to sell something that we couldn't deliver upon. Our product strategy and our leadership team knew what was prioritized and how to drive things, and it made decisions much, much quicker. So I'm advising and supporting organizations, whether they're early, middle, or growth stage, even some public companies, as well as investment firms. So as sort of operating consultant, independent board seats, things like that, that I'm getting engaged with and really enjoying. I find the most joy from systemic impactors, things that companies, not just in education, where I do have an unfair advantage, but areas like women's health, affordable housing, media, AI. Those are sectors where I can be helpful. It brings me great joy to help other people, and that's what I'm spending most of my time doing. And I like to win, so helping other people win is a lot of fun for me, and that's where that's where I'm looking forward to spending a little more time, is with great early stage companies. I love the work that Acquired is doing, but I also am excited about systems changers across education and these areas that if they win, we all win.
That's great. Yeah. It sounds like you have kind of talked about my next question a little bit, but maybe to put it in another soundbite, like is there any particular area, maybe out of the ones that you've mentioned, that you'd be most excited about joining a private equity portfolio company as a board member? If you could describe your ideal role right now, what would that be?
I talk to a lot of investors who say, "Oh, we want to drive a better impact for the world." But when you look at their decision-making models, they might not consider impact when they're making valuation decisions or acquisition choices or investments. And there are operational approaches that can help drive scale for businesses while driving impact as well. And so I get excited about helping folks think about those things together, not think of them as drags on each other.
That makes a ton of sense, and I absolutely love it. So thinking about that role piece is helpful. Thinking about who those folks might be. I know you were really thoughtful about the sort of firms and individuals and people that you spoke with as part of your process and had conversations with over time. But like, what else perhaps characterizes the ideal partner for you? Like somebody that you'd really want to work with?
Where entrepreneurs feel challenged is when they're not sure what's going to happen next. It's when they have inconsistency or a lack of clarity on what they should do, where they should go, what's going to happen. They need support and partners to be on the same ship and who can bring clarity, understanding, pattern recognition, trust, partnership, help entrepreneurs and founders and CEOs understand what the highest and best needs are and how they can help deliver those. The partners that I looked for and looked to helped eliminate a lack of clarity. They were straightforward in how they communicated. There were very few long maybes. They were able to articulate clearly how they could be most helpful, the examples that helped me learn, and helped us move through this in a way that was in it together. Oftentimes, when you're negotiating deals, there's the old adage, one side of the table and the other side of the table, as if there's embedded conflict. It's required that everybody get what's best for their organization. But a partner that understands that, there are win-wins here for us as a leadership team, for example, and our investor partners was always more comfortable and more confidence building. And frankly, that's what you want to see if you want to get the best outcomes.
Yeah, I always love folks that have that mentality walking in, like not to be presumptuous and say we before you're ready for it to be a we sort of thing, but like to step into the conversation from a place where you're thinking about how we can be collective as opposed to adversarial, right? Like how can we like work together as opposed to, being on opposite sides of the table to start with.
That's right. I mean, look, authenticity matters. And the reality is there are times when you engage in, growing a business that you may not be best friends. I'm not suggesting that everybody has to like each other. And I definitely don't feel that everybody has to see the world the same way. But I want to know that I understand how you see the world, because that will equip me, A, to communicate with you more effectively and understand from whence your partnership, your recognition, your pattern expertise, the things that you can bring to the table will come. And that needs to be reinforced all along the way. Authenticity doesn't just come from a conversation or a set of conversations. It comes from the fact that I saw the last 12 deals you did. I know how you are involved in the board. I talk to your CEOs before I talk to you. Those types of things matter. And so, really, if you consider that all relationships are long term, that's where you build in that authenticity and you become a partner that is going to get the phone call back, that is able to text, on a weekend that they're going to be in town on Monday, and that CEO will, follow up and say, drop by for coffee. Those are the types of things that are real and human, and what I think we need more of in the world.
I love it. And I know you maybe just even hit on this question, but I'll just ask it directly just in case there's a slightly different answer. Do you have any final words of wisdom for private equity professionals that are out there on the hunt looking for that next deal?
I think the next wave of capitalism is going to require engagement around impact, not as a nice to have or marketing ESG. I believe that organizations will be required to deliver outcomes for their customers in meaningful ways. And the organizations that will win will be delivering sector changing impact. So if you look at energy, transportation, education, healthcare, consumer, social, etc., the winners in the next 50 years will be those who make the world a better place, not just those that deliver great net and gross retention this quarter and next quarter. And so my advice to early stage private equity folks and folks who are doing business development is encourage and find organizations that are delivering impact and help them understand how you value impact as a driver for the business.
And how do you define impact?
I would define impact as a positive outcome for customers and the sector, not just financially, but in a way that is morally, ethically needed to make the world a better place. Let me give you an example. I work in education, a lot of conversation around equity, equitable practices, ensuring and eliminating bias. I think that's morally and ethically correct. It's also a much larger TAM. It is directly aligned with, if you activate those who have been underrepresented or provide services and outcomes, you get better innovation, you get a more diverse workforce, you get a larger TAM to go and sell to. It's not only correct and morally and ethically right to do this, it's like good for business. So I think if done correctly, and so I think we are getting to the point where capitalism and our approach to macroeconomics will not only be led by mechanizing financial returns through term sheets and deal terms, but winners, those who will have higher retention rates, who will drive better metrics, business metrics, will also be driving better social, environmental, and other positive outcome metrics for humanity.
I love it, man. I love it. That's part of why I've always been so, this, I've been so passionate about, education and K-12 for so long. I don't know if that's the reason why, I and Sarah and the team had so much success in the edtech space is because we actually gave a shit and we're passionate about it, interested in it, whatever. But I love everything you're saying about it. And I really appreciate you giving us the time to pick your brain on all this stuff. One final one here. If you had to sum up private equity in one word, what would that word be?
Impactful.
Interesting.
Private equity gets, I would say, a bad stereotypical rap, in a lot of places as a way to just financially ratchet down costs, increase profit at any cost, combine businesses, vulture capital. There's all sorts of stereotypes with private equity. the reality is private equity has huge impacts. It's impactful, whether you're an organization that can accelerate the growth of a business and its impact, or you're the type of private equity that is, an LBO play that is creating, the reality that is the stereotype. That has a pretty significant impact on people's lives too. So private equity has value and it is impactful, the work that private equity folks do. And so I encourage them to think about their impact and go drive it to make it better for everybody.
I love it. Thank you so much, Carl. Super great to have you on. I've loved every bit of this conversation. And again, thanks for the time.
Of course.